Good afternoon. I'm James Vann with Vann Attorneys, and welcome to our webinar today. We're really thankful that you signed in and really hope that you will enjoy this and it'll be something that's helpful to you. I want to say a special thank you to several of you who have given us some very great suggestions. One of which was to try and make this a little bit more personable with the video. I apologize that the visuals of the video are not any better than they are, but it is who I am, right? So a big thank you to our friends and clients who suggested that, number one. Number two, someone suggested about getting the handouts, the printout of the PowerPoint to you earlier. You should have received that by email today, and you download that. If you are having any questions or problems with that, please let us know. And again, I'll go through the same announcements we normally do. If you have a question, you can either put it in the GoToMeeting or GoToWebinar control panel on your screen, or you can send that to us by email at webinar@vannattorneys.com. Hopefully that makes sense. If you have any questions, let us know. A little bit of some announcements. Our next webinar is July 22nd. At 3 o'clock, so please go ahead and mark your calendar. If you've got a topic that you want us to talk about, let us know. We don't have a topic yet for our July 22nd webinar, but we would love to make sure that we are hopefully giving you information and content that's helpful. We've heard from a lot of you, and that's how we get the topics that we get, so thank you so much for doing that. One other little announcement, I just want to make sure that y'all know, we love helping our clients, and we thankfully hear really good things back about the content that we put out for you. We're trying to do it in several different ways in order to help you. We are now doing a podcast, which you can go to our website and find. You can go to whatever source you're using for downloading podcasts and should be able to find us under Vann Attorneys. We are submitting videos at least monthly, and we work on doing those pretty hard to make sure we get that content out to you. They're usually 2 to 3 minutes. Hopefully that's helpful to you, and as well as the blog, which we try to send out a blog article every week for some topic, right, that we think is important. Again, hopefully that's helpful to you. If there's topics or there are topics that you want us to cover that you're not getting from us, please let us know. We'll be glad to do that. So again, I hope that helps you. And today we're going to be talking about some business issues that hopefully will help you improve what you're doing as far as your business goes. So with that, we're going to get started. So we're going to be looking at business credit in today's economy. And there's lots of things that are going on that we are hearing from our clients. We want to look at how to improve your profitability, looking at if you're using a credit application, a contract, or whatever kind of documents that you're using, how do you use that to hopefully improve your business? How to get paid faster and keep your customers, obviously. We're going to look at electronic communications. We've talked about it some, but I want to talk about it a little bit more because certainly during COVID, that became an even more popular topic, and people were, hey, can I do this? Is this legal? Is it binding? And then red flags is something I want to talk about and why that's important. So do you have a credit policy? What is a credit policy, right? I know some of you do because we've helped you with your credit policy. It's a clearly established policy that your business adopts or accepts that helps the company define the standpoint of who gets credit, how they get credit, credit limits, what level of receivables can the company afford. What are the parameters, right? How do we decide how we're going to extend credit? Who has that authority, right? How do you do that? And I would encourage you as business owners and as CFOs, accountants, credit managers, if you don't have a credit policy, we need to get you one, right? You need to, and we've helped clients with that, and it's really important. I would say very important to help have that. This is not what you want your credit policy to be. It's like, oh my goodness, we're at how much money? It's how old? And again, today may not be as much of a problem because people have money, but we all know what's coming around the corner at some point, right? And we're not trying to deal out of fear. We want you to be set up so that when that does happen, you're not surprised, right? So what is your credit policy, right? The dollar amount of the credit to be extended can vary, obviously, based on what what market conditions are, financial strength, the character and ability and capacity of your customers to pay you, longevity in business, right? There are lots of things that you can look to. Who makes the decision on credit, right? Will there be a limitation on authority, right? Are there levels of authority and approving dollar amounts? Should you offer prompt pay discounts? Are industry terms, right, necessary or expected by your customers? So those are some things that you can certainly be thinking about and trying to figure out whether or not that works for you. Also, look at some other issues like what are the credit worthiness reviews, right? How do you decide that? Are you looking at credit reports? Are you looking at what other vendors are doing? Do you look at the history of the customer or the potential customer? How do you plan on asking for guarantees, right? If you're dealing with a privately owned company, let's say it's been around for 10 years, do you ask for guarantees? Depends on your customer base, right? Depends on I assume the dollar amount that you're willing to enter into for credit worthiness of that customer. Do you ask for security, right? We've got a lot of you who are our clients who you have, thankfully, security agreements in place that you'll get some kind of security, like if it's a deed of trust on a house. We don't advocate necessarily getting a lien on a vehicle or equipment because number one, the equipment and or the vehicle or vehicles can disappear pretty easily, unfortunately, but also they diminish in value pretty quickly over time. Obviously, real estate, unless it's in a really bad location, is going to probably appreciate. So that's a great thing if you can get it, and you may not need it, right? But you may, given what's going on in just the business world around North Carolina now, a lot of you have some customers that are doing major work, and you know that's something you might want to look at. The provisions could also include, and we suggest making sure that you have an attorney's fees provision. I know we talk about this often, asking for reasonable attorney's fees. That does not mean in North Carolina that you will get exactly what you spend, but in North Carolina, reasonable attorney's fees is, number one, by the courts has been defined as 15% of the amount due and owing from your customer. Now, sometimes that could be a dollar amount that would exceed what you actually spend, and sometimes it could be an amount that's higher than what you actually spend, excuse me, or lower than what you actually spend. You spend more than what you can recover. And if that's the case, that hopefully softens the cushion if you can get it collected. So I would certainly tell you, have an attorney's fees provision in your contracts. Also, finance charges, right? I know most of you have finance charge provisions in your contracts. Typically, most people are looking at 1.5% if in the business world necessarily, or it could be the legal rate, which is currently 8% in North Carolina. Also, if you don't have this in your contracts, it's NCGS, which stands for North Carolina General Statutes 24-5. This is the language here. And you don't necessarily, we're not going to read this right now, but here's the general gist of it. If your contracts reference NCGS 24-5, once you get a judgment, that interest rate, let's say it's 1.5% per month, 18% APR, that carries forward until it's paid in full. Versus if you get a judgment just on your normal contract, right, and it has, say it says 1.5% interest, but it does not reference the 24.5 or -5, then at that point, you're going to get 1.5% up to the point of judgment, and then after judgment, it's 8% until paid. Now again, 8% is better than 0, and sometimes that 8% is a huge number. But if you can get 1.5%, then that's obviously a much better position to be in. And here's what some of the really, I think, advantageous parts about that. Number one is if you go get it collected, hopefully you get all that collected. Number two is if it can't collect it right at that time, the judgment's good for 10 years. At the end of that, you can renew it. But let's just say the customer, say in 4 or 5 years, needs to borrow money and there's this judgment against them, right? And they come to you and go, ooh, I really want to pay that. And you calculate how much you're owed, counting the 1.5% over that, say, 4 or 5 year period. That gives you a lot of flexibility to negotiate with them if you want to, right? You don't have to, but to negotiate with them to say, look, here's how much we're owed. Here's what the judgment says interest-wise, but I'll do this in order to get it paid, right? That's just, I know a lot of our clients do that, and it's a great negotiating tool. So something that, no reason not to put in there if you can, right? What about some other provisions? We've talked about arbitration, pros and cons. Frankly, my opinion is I don't think having mandatory arbitration for most business owners is advantageous. Number one, it's very expensive. If you use the AAA, which is the American Arbitration Association, it's been around forever, right? For a long, long time. Really great rules, but you pay a premium using the AAA, which is again the American Arbitration Association. And you know, once you get into it, it's a mini trial, right? You're spending a lot of money really quickly to have your trial. Now, if timing is an issue, certainly arbitration may work out. I've got a client who put that in his contract at one point because he had seen it in some other contracts. He was not paid for a project he was working on, was owed a lot of money. We helped him with it, and we realized quickly that that was there, so we had to go to arbitration. And again, it's just spending a lot of money really early, really quickly, where we probably could have done it less expensive through the court. But again, it's just what it is. I would say really think through that, right? You also want to have the ability to unilaterally modify the credit limit that you set for your customers without the credit customer being able to have approval or not, right? For example, on your credit card, right? Your credit card company can raise and lower the credit limit based upon how they perceive the risk. And you should be able to do the same thing. And your documents need to say that if you're extending credit to your customers. And again, the buyer agrees that any line of credit desired or approved is not a limitation of liability. So here's what happens. We haven't had this argument in a number of years, but we went for about 10 to 12 years probably with sometimes the debtor saying, look, when I first, opened up an account with you, or we started doing business together, you gave me $10,000, right? And then you raised that to 25, and it stayed at 25. And now I haven't been able to pay the 25. I really should only owe you only 10,000. Well, thankfully the courts have not, in North Carolina, have not bought that. That actually has stuck in some states. Has not stuck in North Carolina, thankfully. But in order to get around that and not to even have the argument, just have a provision that says you get to unilaterally make that decision, right? Customer can't say anything about it. And then some other things to do is obviously if you're using credit reports, you want to make sure that the customer has authorized that and approved that, and it has to be in writing. And I know a lot of you have that already in your agreements. Also, a provision that says that if the buyer agrees that the information supplied by the buyer is correct to the best of their knowledge, and that they will notify you if something changes. I think that's a huge benefit. We've actually been able to use that in court sometimes when something changes in their business and they say, well, you should have known that. Well, did you tell us? They need to tell us that, right? And so you want to make sure that that's in your contracts as well. And this is something else that I know y'all are dealing with on a regular basis, right? Where you have a contract with your customer, say it's a credit application, credit terms, whatever the agreement is that sets up the initial relationship with the customer. And then maybe there's a purchase order or some kind of document that follows that has different terms and conditions. Now your contract probably says, hey, look, these are the terms, we're not changing from that. And then there says, by the way, these are the new terms. You go, wait a minute, that's a conflict, you can't do that. In North Carolina, it's called Battle of the Forms. And actually that term refers to, in most states, it's called Battle of the Forms, where you have one form that says one thing and another form that says another, right? Or contracts, and all of a sudden you have a dispute. The general gist is the last contract or last contractual document that was signed will probably control it. And I say probably, more than likely that will be the case. So here's what I would tell you to do. If there are different terms, when you see the next contract, say it's a purchase order or some other contract from your customer, you say to them, hey, I'm willing to accept these changes. However, the contract terms and conditions in my credit application or in our original contract dated such and such still apply. Just write it in, sign it, send it to them. So hopefully that will be the controlling document. If you have questions about these kinds of things, call us, because we can walk you through it. There are several other issues with battle of the forms, and it's, say for example, your customer sends you a document that they've already signed. You make changes and then sign it and send it back to them. Is that a meeting of the minds of those terms? Well, the question, probably not, right? You change the terms and send it back to them. They actually need to sign it again and send it back to you. Hopefully that, I know it could be a little bit confusing, but there are several things that y'all need to think through on those. But again, the terms and conditions of the agreement that is last signed probably control. So just think through that, and if you have questions, let us know. Again, we've talked about the creditor shall have the sole discretion and authority as to how to apply the payments, and we certainly would encourage you to make sure you've got that in there. A lot of these kind of provisions just avoid the arguments, right? So you don't have to hear that from your customer if there is a dispute. Hopefully it won't be a dispute. Also, this is something that's been coming up lately. The seller or the customer, you, whoever, how you want to say it, shall not be liable for damages or other losses resulting from delay in delivery or performance where such failure is a result of a cause beyond the seller's reasonable control, acts of God, government laws, regulations, shortage of materials, and so forth. We have had, as you can expect, given what's going on right now in the world with delivery of products and the price fluctuation of products, right? It's been crazy. I've got a client who we just helped with recently create some contract language to put in, because they're so worried about being able to provide materials. We created some boiler language that they can put in their contracts to help them with if they for some reason can't get the materials, or there's a material shortage, or there's a labor shortage, right? There's all kinds of sort of odd things going on in the world right now because of, I guess you could say, the pandemic, also just the economy, what's happening, just some really strange things that most of us actually haven't seen before, or we've dealt with in a different way. But I would encourage you to have that in there, right? Also, some kind of limitation of liability. I'm not going to go into great detail. It really depends on your business and what you're doing, but I certainly would encourage you to think through that a little bit. So hopefully those things help you in your contract. So how do you work on getting paid faster, right? Obviously, having sound credit decisions. I know most of y'all work really hard at doing that, and you do a great job with that. Being persistent in contacting and following up with your customers, making sure it's timely, right? Contact them as soon as you can. Calling on large invoices, we've talked about this before some of the other ones, right? To make sure they have everything in order. There's no questions, no problems, no issues. This is not what you want to happen. They owe us how much? Oh my goodness, right? That's not the kind of look that you want to hear or to show in your business, right? Follow up with your customers by email, right? Contact them, make sure they've got everything they need. Sending the invoices and statements by email is also a lot of times. I think most of our clients are doing that now, or you have a portal that they can receive it that way. Having and using a strong procedure and timeline to follow up for collections is really key, right? If you can do that, that's awesome. I know many of you can place orders on hold, which is a huge advantage. We've got a client right now where that happened. They put it on hold. Someone made the decision to open it, and all of a sudden they had a huge problem. And it's always then trying to play catch up. Do you offer discounts to them for payment early? Those are things that y'all get to make decisions about for your business. Again, setting up payments by wire with your customer to avoid delays in the mail. And I hear from customers all the time about how slow the mail is now. We certainly experience that as well. Personal phone calls to follow up with your emails. Again, contact the customer within 5 days of the invoice being due. Make sure they got what they need, and avoid those issues if you think that could be a problem. And obviously, those customers where those problems probably occur. Sometimes, and I say this often, sometimes a different voice matters. Not that your voice or someone else's voice is not effective, but sometimes it just takes someone else calling the customer to say, hey, look, we want to follow up with this. I know you've talked to so-and-so, and we value you, but we want to make sure that we get this paid. But sometimes just having a different voice really does make a difference. Sometimes just visiting their office, right? Hopefully, now that COVID's issues are starting to be less, you're making customer visits, following up with them. And you know what? I mean, the video, I don't know if many of y'all have done this, I haven't really heard yet, but if you could even set up a video call with your customer, just learning more about their business, right? Find out what's going on. Empathize with your customer when you talk to them about the challenges they're facing. I can tell you this, I got contacted yesterday about doing a presentation, and I hope I can do that, on shortages of materials and labor, right? So the issue is this, right? Everybody's trying to push that somewhere else because they don't want the liability and the responsibility if they can't perform their job based off the contract, especially if there's a time sensitivity to it. So hopefully that makes sense, and hopefully that helps you a little bit. We've talked about contract law before when using the internet and email and that kind of thing, and even texting. I would encourage you to, if you have questions about it, let us know, or ask somebody who has got legal issues with you. Even, I think it was yesterday, I got an email from a law group that was talking about electronic contracts because of the COVID issues, right? So many people now are doing stuff more electronically, which hopefully it makes business easier. But can you have a valid contract without having the paper, right? And can you utilize electronic communications to bind yourself and your customer, right? And there's two pieces of law, but one's federal, one's state, that says yes. And the general gist of these laws are electronic transactions are authorized and binding, just as though you had paper and blue ink. Now, there are some exceptions, for example, like wills and real estate transactions, that there are some exceptions to that, and even they're making some more exceptions to real estate. But like wills and stuff, you can't do. It has to be originals. And there's a few other issues, but for the most part, thankfully, electronic transactions are authorized and they're binding. And without getting into the details, because this is not a conversation just about electronic transactions, voicemail now, because of how the federal and the state law is written, voicemail can be considered as electronic transactions. So, for example, let's say you've got a contract with your customer, and there's an issue that y'all start leaving voicemails with each other that are contrary to the written agreement, right? And let's just say it can be electronic written agreement, or it could be paper, right? But let's say it's paper. You started out in paper, but your voicemail starts to change the terms. Can that be binding? I think it can, but you've got to be able to produce those recordings in their native form without them having been changed. That's an IT issue for most of us, right? But it's one of those things that's now included. So be careful or be thoughtful, right? When you are leaving voicemails, that you're not leaving a voicemail that's different than your terms. Hopefully, if you have questions about that, call me. I'd be glad to help you walk through that a little bit. So again, some practical considerations, things, whether in an electronic or paper form, keep in mind that signatures and contracts are now, without a doubt, enforceable, even if they're in electronic format. You can change existing contracts, even if it's in paper, right? And you start changing it with your texting or your voicemails or email. Can that change it? Absolutely. I've not seen one yet using social media, and hopefully we won't, but I wouldn't doubt that that's on the rise, right? So make sure that you realize that there is significance to that. New contracts obviously can be formed through electronic means as well as paper forms. I really thought this was going to be more of an issue, and I haven't heard of it yet, but it still sort of scares me. When you get a message from, say, your customer, right, and it's a purchase order, and it says there are additional terms attached on the reverse of the electronic message. Well, there's not a reverse of the electronic. It's usually the reverse of the paper form, right? Or there's another attachment too. You got say maybe two PDFs. One is the front is the PDF is the purchase order, and the second one is the terms and conditions of that. Make sure you read through those. Those are really key. Even though it may not be on that one PDF, if it references the terms and conditions and you don't see them, you need to ask, well, what is that, right? Where are those? I haven't seen that. I need to make sure I know what those terms and conditions are. So hopefully that's helpful to you. PDFs can be changed. So, it used to be, I think most of us thought, well, PDF can't really change. Actually, they can be changed now. So you really want to be cautious when you get a PDF. Make sure it's exactly what you have agreed to, that you've looked at maybe previously when it comes down time to signing it, right? Use caution when approving those applications or purchase orders in a PDF format. Just make sure that that's what the terms are that you meant to do. One other thing I wanted to mention to you about the North Carolina, and it's across the country, but North Carolina actually has a statute as well on identity theft and red flags. Some of you I know have red flag policies because we've helped you design those. North Carolina requirements require some things, and federal require some others. Here's the issue. If you aren't careful, and there's an issue with, say, for example, your company accidentally discloses, say, maybe Social Security numbers, driver's license numbers, checking account numbers, whatever it may be, and they trace it back to your company. If you don't have a policy, a written policy, you can be liable for treble damages. So that's damages times 3. So the question is, what does the law require you to do, and how do you do that, right? So this true story that happened yesterday. I won't tell you the entity, but there is a entity in North Carolina that I am a part of. I got an email yesterday from them that says it's time to renew your application with this group, right? And it's in the email. It said, here is your sign in, your ID, and here is your password. Now I keep it on my phone, right? I have a password keeper on my phone, keep up with all that stuff. And I thought, surely they didn't put that in the email, right? Your sign in and your password. Surely that's, and I really started thinking, I was like, is this like a scam? I mean, it looks legit, right? Right company, right logos. Everyone went, maybe it's a scam. I pulled up the app for the password app and look, I'm like, daggum, that's exactly right. So I logged in to the website using what I knew was their login, and sure enough, it was time to renew it. And I could not believe that they put my ID and my password in. So is that a problem? Yes, it is. Could that group be held liable for this? If I have damages, potentially, right? I don't know that I'd have damages at this point, but possibly. So you don't want to do that, right? So in North Carolina, defined by statute is you should redact anything in there, like, say, for example, the Social Security numbers or something of that nature. No more than the last 4 digits of identification number are accessible as part of the data, right? You want to make sure that no one else can see that anywhere, right? Even in your company. For example, let's say that the sales department, they don't necessarily need to see Social Security numbers, tax ID numbers, bank accounts, driver's license. I wouldn't think. I mean, maybe they do in your business, but I wouldn't think the sales group needs to see that. But maybe the credit group does, right? But again, there are things where you need to limit what you show, right? So for example, if you're going small claims and you take a customer view of yours to small claims, if you have an application, a credit application or a contract that has any of these things listed on here, and you file that document without redacting those numbers, you got some liability. So please, please, please be careful with that. Or even if it's accidentally exposed, you've got some issues. And as we all know, you get probably stuff in the mail all the time. You hear it in the news, such and such company's gotten hacked, right? And their information got out. Or, it used to be that people would travel around with all this information in their laptop. Well, hopefully that's not happening, or using their iPad or whatever it may be, right? So what's the liability, as we talked about, is 3 times the damages, and that's not a good place to be in, because say they can show, what, I've had a $250,000 loss because of this. That's $750, right? So you don't want to necessarily be looking down that. So that's the risk that you're looking at. Violations of the Act automatically qualify in North Carolina under the Deceptive and Unfair Deceptive Practices Act, which result in treble damages, right? You don't want to be in that situation. You need to have a written policy, and you need to have some training, right? So what does that mean? It means that you have training with people in your business to talk about what red flags would be. It doesn't say how often. You just need to do it every now and then. I would probably say every 2 or 3 years, maybe. You just make sure that you're showing that you're trying to be intentional in protecting this information. You cannot, for example, use social security numbers as the password. You can't require them to do that, or something. I mean, most people wouldn't do that at this point anyway. Or you don't want to be able to disclose that. And there's lots of things that you should not, that law says you can't do, right? You can't print out social security numbers on mailed material where the number might be visible in the envelope, right? You don't want to do that. And I would say you don't want to send it out anyway. And if you're dealing with customers on social security numbers, driver's license numbers, that kind of stuff, I would highly encourage you to use some form of electronic transactions other than email, some safety database that you can put that information and then send them a link to it, or they would do the same thing, because you just don't want that liability, having that going back and forth in email. So because those things can get scammed so quickly. Obviously, you don't want to sell or otherwise distribute this information outside of your business, right? I know most of y'all wouldn't do that anyway. And same thing, if you've got a password protected login for them, right? You don't want it to make it easy for someone who doesn't or shouldn't have exposure to that information to be able to do it, right? And you would not ever want to do that over the phone, is to say, yeah, I'll tell you which password it is, and give it to the wrong person. So hopefully that helps, but the law really requires creditors to develop and implement a policy and protection. It's not a guarantee, it's just a protection to help hopefully identify issues, right? You're looking for detecting, preventing, and mitigating ID theft. That's really what it comes down to. And hopefully that's not going to be an issue for any of y'all. But as you know, I mean, Lord knows, if hackers can get into a power plant or the gas pipeline, right, and shut that down, they can probably shut most of our businesses down and steal the information. So you don't want that to happen. You're looking for things that would detect a warning sign for identity theft. You want to mitigate those damages the best you can. Where is this likely going to happen? Probably opening new accounts when it's billing for equipment or services or whatever it may be. When you look at the records of the customer, or you get information that says, hey, look, here's the customer rate, all this is going to change, right? New contact, new phone number, new mailing address. Someone should go, wonder if this is legit, right? Because you want to make sure that it is. And I would tell you not to call the information that's on the new stuff you get, but call the numbers you have, right? That hopefully can avoid any issues. There's a recent issue, and for example, you've heard these things where emails get hacked, and we've got a case where that happened not too long ago, and it involves $500,000. And the parties even said, don't change this information, right? Don't rely on anything else unless we talk about it by phone. Well, they got hacked, 500 grand out the door. And it's crazy, right? But that's just what's happening. So creditor needs to be able to identify the red flags, set up procedures and policies to look for those. What do you do once you know that there's or may think there's a red flag? How do you update that policy and keep it current? And then also, how do you educate? And you got to document. I would tell you to document the education. It's basically, we talk about these things. These are the people that were here, and you just save it just in case you need it. Hopefully you don't. Look for suspicious documents, information, account activity. We had a picture at one point where it was someone's on their ID. It was a picture of a guy and a girl, right, hugging, right? They're in a little booth hugging. That was the picture on the ID. Probably is a red flag, but maybe not. So look at this. Here's one right here, right? Is that the same guy? Maybe, maybe not. Don't know. But photograph doesn't match. If the appearance of the forgery or altered documents, those are the things that you're looking for. Again, don't be confused that you're having to guarantee this, because you're not. You're just having to set up a policy to say these are the things we look for in trying to protect our customer information. And you get these things all in the mail all the time. Hey, this is what this company that you do business with is doing to protect your confidential information. You don't have to do that, but that's what some of them have to do by law. But thankfully, most of you, I don't think, have to do that. You're looking for things that could identify issues or red flags. And I'm not going to go through all of these. You can read them at your leisure. But again, it's something for you to think about. You want to be able to have a policy to prevent it and to mitigate it if it ever happens, right? So hopefully that helps you with that. If you have questions about those, let us know. And I'm not going to go through all that right now. I hope this has been helpful to you about how just a few items that you can hopefully look at that might improve the profitability of your company and the collectability of dollars that are owed to you. And again, we want you to reach out and let us know if you have questions. If you haven't connected with us, most of you have, I think, probably we'd love for you to connect with us further. Thank you so much for dialing in today, and we look forward to participating with you in our next webinar. And if you have questions or need some help, let us know. Thank you so much.